business is called Transform Capital Management. It's essentially a model for a private world bank. We cheekily call it that. It's actually, the longer term is a global impact investment bank, because we think the solution is combined strength for this thing that has emerged. It's been all around for a long time, but about 3 years ago, the Rockefeller Foundation and JP Morgan termed impact investment as investing for social and environmental returns alongside financial returns. So what we've spent around 6 years creating is a model for that. The termed up, and it's morphed into something that we believe can unlock about 150 billion sterling in intelligent public-private partnerships over a 10, possibly 15-year period to plug these gaps that we're hearing about throughout the COP, and to do so in a way that's designed fit for purpose.
Right. I mean, what are these gaps that have emerged? I mean, which kind of areas are we talking about here?
Well, we see there's two specific challenges. One is the conventional valley of death. For entrepreneurs at the early stage of the investment cycle, no one's interested. There's no process to go and get capital, and when you do get capital, you can't get the next round or the next round or the next round. The reason for that is finance has really become very, very short term, and things like venture capital is technically a failed asset class. It's not delivering returns to the pension funds, and partly it's de-risking. There's structural issues, so their mechanism to do less deals annually, smaller funds, looking for what I call bigger trees, which typically are high in intellectual property and low in capital intensity. So digital type businesses, they can attract funding, but actually we need to fund everything else. And venture capital isn't about interested in funding retrofitting of buildings or the many things we hear about here. So in terms of this one gap, the valley of death as it's traditionally called, we need to have system innovation in how we plug those gaps. So we believe that the mechanism is blended funds, where we align capital from institutional investors, from governments, from philanthropists, and from the retail investor ultimately into more appropriately larger structured funds. So this is one of the gaps. Now, it doesn't make any difference if we solve this in the United Kingdom, for example. We've got to solve it around the world. It's no good solutions in California. It's got to be around the world. So to do that, you have to have a system design that can scale. So I'm going to come back to one of the other gaps. So this is the valley of death. We think the other gap is in new initiatives in finance. So new types of funds typically die on the vine because they get so much pushback from the existing system. So our model for what we call a private world bank or a global impact investment bank is designed to very intelligently fill both of those gaps and to scale on a global basis.
So I was going to ask you how, first of all, I think you might have to change your name, the Valley of Death,
No, that's not our name.
Yeah, no, but I know it's a name, but to try to convince you, so you're trying to convince investors.
It's the Valley of Life, really.
Okay, fine, well, that's a better, more positive term, I guess. But I just wonder how you convince potential investors that they should be investing in schemes that the system up until now has said, it's not worth it, it's too risky, there are no returns.
Okay.
How do you go about changing that mindset?
So it's a great point. So the key is the structure. So if you analyse the detail, and I've spent 6 years looking at this and working and developing this model, just things like what's called the mandate of a VC fund basically is designed to fail. It's called a 10-year 220 model. And essentially the fund is a 10-year fund, and it's designed to 2% of funds under management pay its expenses, and the returns for the people who run that fund are the 20% taken from the overall returns. That model doesn't provide patient capital. So partly you have to change that model. You have to, and typically that kind of fund would have 100% equity from a pension fund. Well, or from high net worth individuals. So essentially they're on the hook for all of the risk. So that's not an easy sell, is it? You're saying,
right.
You've already failed. I mean, venture capital as an asset class has failed for 13 years out of 15. If you look at the numbers, the Kaufman Foundation have a very interesting report. There's many reports on this industry. Even Peter Thiel, who's the first real investor into Facebook, he has a fund called Founders Fund, and they've analysed in depth the failures of the venture capital industry. So they have a letter on their website which is fascinating to look at. But the bottom line is we need patient capital and we need to take the risk off all of the stakeholders. So that's by saying, well, Mr. Pension Fund, we don't want you to put 100% risk. We want you to share some of the risk, some of the returns helping with government and also with the big philanthropists. So by blending, using a term that many have really hated, it's called structured finance, by blending efficiently you can do something really important. You can lower the average capital cost, which means that you can pay for help and support that the businesses need. They don't just need money, they need a system of getting help and support and objective analysis. So for those systems and support, it's essential to change the whole thing, using the existing sort of components but putting them together in a new way. So just back to what our model is, we think to do this you need help and support. So our model is to have 30 global corporations who essentially sponsor this private World Bank with a different brand name, which we can't release yet, but our company is called transformcapitalmanagement.com if you want to take a look at the website. And the mechanism is, rather than Formula One or the Olympics, people like Unilever or IBM and Cisco and diverse companies who really want to address the issues, our model is for 30 of them to sponsor this private World Bank. What that provides is core capital, so the business itself, essentially the banking function, can operate for 10 years with help and support and global brands behind it. And that means what would be called the asset management, the bit where the investments are actually made, sits below. This is designed as a social commercial hybrid, so it's designed to make money and generate returns, but with long-term governance that says it's designed to fix market failure in an appropriate way. And you know, getting back to the subject of COP, we're never going to address these issues with aid or charity or philanthropy. We just simply are not going to do it. But nor are we going to do it on the other side with capital that has to compete with a hedge fund, because they've got something called liquidity, meaning, or you know, many of the financial markets, they've got the ability to take capital back out very quickly to reduce their risk. With many of these things, infrastructure and the capacity building value of life, if you want to call it that, it takes longer and it's going to cost more. So unless you have what's called system engineering in finance and you create the right conditions for new models of funding to emerge, which we will address through our global impact investment fund, or direct investments into what we call the broad tent of sustainability, could be energy efficiency or new geothermal plants, or you know, we know the subjects that are addressed here. Unless you get capital to what I call the plankton of our economic food chain, that's the lifeblood of our food chain, companies of 1 to 500 employees, unless we do that in a way that's more cost appropriate and more sensible with added value, help and support, and in funds that aggregate many of them to offset the risks with some of the successes, unless we can do that, we never address these issues. So the Green Climate Fund, you know, my comment what's going on at COP, you know, we can circumvent these negotiations, frankly, by creating models such as what we're doing. Ideally, things like what we're doing would be incorporated into the Green Climate Fund, but all the thought has been how the money's been raised. No one's thought really in any detail about how it gets deployed. And that's where you need new cultures, new systems, new mechanisms, where the people who are motivated can get together with sufficient strength to overcome the pushback they get from conventional markets.
And has there been a response so far to these proposals? You know, walking around here at COP18?
Well, great question. So for 6 years I've had pushback. It's been I've been one of the guys who's been ignored, who's been laughed at, who's been the crazy guy in the room. And the bigger the idea, the harder it is to actually convince people. But remarkably, we've had the most amazing year, and particularly the most amazing 3 months. And the last 3 weeks, things have really, really turned around. I've been in Dubai and Abu Dhabi, and I've been in Qatar for the COP. And it looks like we might be able to co-locate the global headquarters between the GCC and London and Delhi. So discussions that are coming here about how do you create the strength that enables it to get out of the gate. So we have discussions now about the final equity we require to take this forward, and the sponsors and also the governments that would fully support it. So touch wood, it is pretty close to coming off. And finally, it's something that could unlock so much of this latent power, latent innovation that all of the people here care, but we just need to put them together at strength.
Okay, well, we'll talk to you in COP19 and see how it's going.
Thank you so much.
Thank you very much.